Hi, my name is Bruce Raw, and today my guest is Dave Horwedel. Dave is an enrolled agent and the founder of Torchlight Tax. Dave, the question I'd like to ask you today is, there's a standardized deduction when a person does their individual taxes, and there's also itemized deductions. How would you go about determining which way is going to be more beneficial?
Well, what you do is you actually take all the itemized deductions you can find and you add them up and see which is larger. If a guy has, a house and he's paying mortgage interest on the house, it's probably going to be larger than the standard deduction. If a guy makes large charitable donations,
especially if it's an expensive house with a large loan.
That's right.
If it's an $80,000 house, that might not be true.
Right, but if it's an $80,000, that might not be true. It depends on how much interest he's paying on the house. And the standard deduction is for a single guy, it's about $6,300. For married filing jointly, it's $12,600. So it depends on how much you have of these different things that count. There's a lot of things that can count on itemized deduction. The biggest ones are usually, if you have very, very high medical, that can be one. If you have high interest on a home, that very often is one. That's usually the make-break point.
Forgive me for interrupting. Isn't it right that in order to count your medical expenses, it has to exceed 10% of your adjusted gross income to even be able to use it? Is that correct?
Right. That's right.
So if you're making $50,000, then you have to spend more than $5,000 on your medical expenses.
Right, and then it would start counting, but the standard deduction is going to give you $6,300, so you wouldn't even you'd have to be over $11,000 as a single guy in medical expenses before you even considered it. But sometimes people do have high medical expenses. That's one of the things that could happen. And the other one, sometimes people that like to make a large donation to their church or something like that, that could also kick in where the itemizing the deduction becomes very worthwhile.
Okay.
And it's very easy to do. But all you do is just give your tax professional yourself, you work out all your itemized deduction, and then whichever is greater is what you take.
Okay. And is there a limit on some of these deductions that bears mentioning? Like you were just saying, giving money to your church. What if you gave 80% of your income to your church?
Well, the maximum that you can donate to your church is 50% if it's cash. And there's also, if you donate a property that's gone up in value and you want to deduct the full value of the property, you can do so up to 30% of your adjusted gross income. But you start getting into complicated things like this because I don't think everybody out there is going to understand.
Basis and all that stuff.
You want to get into this sort of thing, I recommend that if you don't know what I'm talking about, see a tax professional.
And you'd be glad to answer their questions if they were to call you?
Of course.
Great. Thank you so much. Thank you for watching.